16th of August, 2025. Where do you see, the equity markets actually being tentatively at that time, 3 years from today?
While I would not give you levels, but definitely up. All you need is, invest and forget. The more you invest, the more you get attached to looking at the screen, tracking the stocks. If government today came in and said that, okay, you can't, there are no tickers available and you can't even take out your money for the next 10 years, everybody would make money in the stock market.
Welcome to yet another episode of the Smashed, Bashed, Yet Not Dashed podcast. The thing with making money in investments, making money in the stock market is that people think that it's become a game. Today we have two very special guests, Puneet Oberoi and Puneet Aggarwal, two people who are masters when it comes to all things investing and multiplying your money. This is one podcast you really want to listen to. Trust me, we've been down this path where I have been burnt and wiped out in the stock market. I'm sure you know many others who have had the same problem as well. This one changes everything. Okay, so if you think that this is a game, then what you probably want to do is get yourself a copy of the stock market game. This one, ladies and gentlemen, is serious business. This podcast is about serious business. Listen in to hear more.
Have you ever been knocked down and found it hard to get up? Have you ever been knocked down and bounced back to come back even stronger? Hi, I'm Gaurav Bhagat and you can call me GB, and welcome to the Smashed, Bashed, Yet Not Dashed podcast. A fortnightly podcast where I speak about persistence, perseverance and overcoming the odds to come out ahead.
Welcome back to the Gaurav Bhagat Academy and for yet another exciting episode of the Smashed, Bashed, Yet Not Dashed podcast. Today's podcast is going to be different because not only do I have two amazing guests on it, but apart from that, we're going to be talking about something which is very close to my heart. Many of you know that I talk about, goals and in particular, the financial goals. So today, two experts in that particular domain and really looking forward to this one. So first up, welcome Puneet Oberoi. And welcome, Puneet Aggarwal. Great to have you guys here on the podcast. So, just to introduce Puneet first. So, Puneet has been in this space for almost 2 decades now. And, he's been helping companies and people, individuals and more with his company, FinAdvise, and in the space of financial planning and more. So, Puneet, welcome and great to have you here.
Thank you, Gaurav, and love to be part of Gaurav Bhagat Academy, and to your audience and for you. I'm here for any help you need.
Awesome. And of course, Puneet Aggarwal, one of the people I really look up to and respect when it comes to everything to do with equity, derivatives, and the stock market. Someone who's, been an active investor for, again, close to 2 decades and is now giving back and teaching and more in the space. And of course, runs an amazing company called Nirogam in Ayurveda. So entrepreneur, investor, stock trader, and, you call yourself almost the equity hacker as well, right? So welcome, and let's hear a little bit more about that as well. Equity hacker, where does that come from?
Thank you, Gaurav, and always good to be here.
Lovely. So, there is, and the reason why I have both of you on today is the fact that, when it comes to the markets, when it comes to investing, trading and more, today's youth almost has this, misconception that it can be a get rich, quick kind of, phenomena. And of course, all of us have, been on journeys. I'm sure many of your clients have been on journeys where this is such a big misconception. So, Puneet, I'm going to come to you first. What are some of the real misconceptions that you're seeing in the minds of, all audiences today when it comes to investing and growing wealth and finance goals?
Absolutely, Gaurav. This is something which is actually pulling people towards taking too much risk on that. Mm-hmm. And they get lured. And the generation which we are talking at, it's the Z generation. Mm-hmm. They are actually looking at people who have scaled up in a small time and looking forward to them. They think that they can also make money.
Right.
And I've been teaching in a lot of PGDM colleges, and these are youngsters who have aggressive approach. And one of the subject I teach is entrepreneurship and innovation mm-hmm. management. Mm-hmm. And people are just talking about that they are jumping into this, whether into equities, whether into putting up as a startup. They just look forward to becoming rich ASAP. They don't understand the pain and the time which takes to reach out to those levels. They just see the the outlook of other people who have just scaled up, those people might be lucky enough. I always believe that there is certain things which goes behind that.
Of course.
And the rest 99% have to work hard to reach out to that level. Right. So I think we have to understand, we have to teach them that this takes time. That's what my prerogative is.
That takes time, and truly that has always been, I think, your approach towards building wealth and financial well-being. Puneet, from your perspective, I'm going to take you back many years where you had your first smashed bashed experience in the stock market, and you talk about this often, where you tried to do something and it led to almost your entire bankroll and capital being wiped out. Talk us about that time and how it really and what really happened.
Yeah, I think it was. If I correctly remember, back in 2007, when my neighbor Bhatia ji was a sub broker with one of the brokerages, and he said कि बेटा थोड़ा पैसा आपके पास तो you're earning money, you started earning, so मैं आपको कुछ बताऊंगा, आप उधर बस डालिए and it will happen. And as most of the time it happens that you get some kind of beginner luck, which is very dangerous. And I started dabbling in futures and options at a very early stage, based on hearsay, which was later proved to be fatal. But then I made some money, and then I actually took a sub-broker terminal myself, where I started to manage people's money and invested some of my own.
Right.
And one fine day, I was having my lunch. We had huge F&O positions in McDowell's, now United Spirits. Right. And within 15 minutes, my dealer comes to me and says, "Sir, dekho kya hua screen pe." I lost about 15 lakhs, which was huge. To be losing in 15 minutes. And that kind of and my dad was sitting next to me, and he said कि बस बेटा हो गया जितना तुमने करना था, this is it.
Correct.
And then I had quit. I did not look at that space at all.
Right.
For the next 6 years, and then that is how I entered again.
Yeah, and I love what you just mentioned, where you spoke about beginner's luck and how it's such a dangerous thing. And I see this and hear this repeatedly, and Puneet, I'm going to come back to you on this one as well. I'm sure you're seeing this with clients as well, where they have that little bit of, a luck, and it could be anything, could be in equity, could be in derivatives, could be in crypto, and they're like, I know, how come I didn't discover this before? This is the way forward, and I can stop doing everything and focus only on this. And then, like Puneet mentioned, it just comes and smack hits you on the face. So have you had clients who've had similar stories as well?
Absolutely. I was just sharing to Puneet during our conversation before, and I was just sharing that in 2020, a lot of my clients, their spouses, they were working, might be working part-time, they left their work. They said that, and they actually got that gist of 2 to 3 months of trying out, because people were vacant, they were at home in 2020-21, and they all tried to put across money in equities, and they got that luck in 2020. Yeah. And that 3 months gave them that gist, and a lot of them actually quit their job to do trading and make money. Yeah. And that actually had to fall, as he said, that it's beginner's luck. They started off without any knowledge, nothing doing. And all these things came out in front of them in 2020. They came back to me, and that they realized that this is the mistake which happened, and that there were a lot of people going like this.
So true.
So it's a crazy time, and it's not just one time I've seen. These are times which every market, starting from 2007, 2008 to 2013, 14, and in 2020 also. Yeah. This happens. Every time I see those people pulled out because the market is gaining, everybody comes into. Correct. And those beginners' luck actually fails.
Yeah. And I think you hit the nail on the head. There's two emotions that they talk about, fear and greed. And what happened in the run-up post the pandemic, and we're going back now, I think the lowest of the lows was probably around, the end of March of 2020. I think that's when the market hit its bottom. And then after it just ran and it ran and ran, and everyone, and anything you could put money into was just going up, right? I know so many entrepreneurs who were taking money out of their organizations, who were taking COVID loans and just pumping in the stock market because they said there is nothing better. And of course, it went up and up and up, and everyone believed that the only way the markets can move is up, right? And of course, I think it was October, November, December of last year where we started seeing a peak as far as the Nasdaq went. I think March 22 was probably our peak. And then what we saw in the last 3 months here, running up to June, I think that's when the greed, turned to fear. And everyone said, mar gaye, pata nahi kahan ghus gaye. So, completely, agree and echo those thoughts and sentiments. So Puneet, I want to talk about from your perspective. What are you telling, your clients? What are you telling people? What would your advice be to even the youth, who are coming in and they're really enamored by this? But then what are you telling them right now?
So Gaurav, my belief is always that you need to approach to certain things according to your goals. Whether it's a short term, whether it's a long term, whether it's whatever, you have to approach for, whether it's even creating a business also. You need to think about what, and accordingly you have to put it across. If you are putting your money, and this I've seen during 2008 also, a lot of people the real estate was going up.
Right.
People had a huge sell-off and they wanted to invest because equity was going down, going up.
Correct.
So they wanted to invest into equities also. And they had a short period of buying those things because real estate had those time. Okay, one, we have a time frame of selling and then buying a new property.
Yeah.
So they invested during that period.
Right.
And that crash actually created the whole chaos. When 2008 happened, those people who invested for short duration and they invested, and this happened in every field. I think if I talk about in gold, in real estate, any asset class you talk about, every people who are coming with short approach with the approach of that, okay, making higher money in shorter terms, they will lose money.
Correct.
So my always belief is that you choose out the whatever side of asset class you are wanting to choose out according to your goals.
Right.
If you want to go in for short duration, you can't take risk like these things. You have an approach of 10 years, take those equities. Why don't you? Those are the best places. You need to give that space. But people don't understand that. And my approach is very simple. According to your goals, you just choose your asset class. That's what my approach is.
Love that. So from your perspective, it's about come in with your goals, write your goals down, know your goals, and then basically deploy money accordingly.
Absolutely.
Puneet, from your perspective, and of course we follow a lot of trainers, influencers, gurus in the stock market, and some of these guys almost come in with a day-to-day perspective. So now it's going to be different. Now here Puneet's talking about long-term wealth creation, and we follow certain people who are actually talking about on a day-to-day basis, where they're almost saying, okay, this is your trade for the day. Take that 2,000, take that 5,000, take that 10,000. What is your take on on this aspect?
I think I'll like to quote Sunil sir first. And he says, market beta mayavi hai, ye aapko apni taraf खींचेगी. And that is how you, when there is, after the fear cycle ends, there is greed, there is euphoria, and everybody would try to, enter that I'm going to miss out on this trend. And that actually happens towards the fag end, and that is where you are not able to manage the risk. What I see is that, beginners who are actually coming into the stock market, they never calculate the quantity, right? And hence, they would not know what is going to come and how are they going to manage the pullback or the down wave.
True that.
And then I think what one of the investors, Mr. Basant Maheshwari, says that either you want fast or you want large. What do you want? And if you want big money, then do not expect it fast. And if you want fast money, then be okay with small.
Correct.
Right. Yes. So that I think people need to understand.
Yeah, I love that perspective. So either you're looking at big or you're looking at fast. You can't probably have both in the same space. And hence, when people talk about value investing and such, then your proposition also has to be like Puneet mentioned. It has to be more long term. Yes. Totally love that. Of course, you mentioned Sunil. So for those of you listening in, this is actually Sunil Miglani, someone who we really respect and we follow, and has really been great in terms of calling the markets. So yes, definitely check him out. Before I come back to Puneet, so there's been this big explosion of YouTubers, influencers. And people sometimes get confused, who to follow, because someone worked for someone and everyone then runs to follow that particular person. But again, different people will work for different, mindsets. So what is your thought on that? Like, everyone just tries and jumps onto the one which is, the trending, happening play for this moment. I mean, I know it's PR Sundar and options, and there's various people. I mean, you have Mr. Malkan, who's been, your coach and trainer as well. So what is your thought on who should one really follow when it comes to some of these names?
Yeah, I think, most of the people take to YouTube and try to consume a lot of content. And I think YouTube is like a buffet. Ultimately, you would go to a shadi, look around, see all the options, and then come back to something which really fits your kind of style of investing or trading.
Right.
So, and you may not even know what your style is. So, one book that I recommend is Super Trader by Van Tharp, and that actually tells you there are 7 kinds of traders.
Interesting.
So once you understand what is your style of investing, then you can go back and see which teacher or coach can actually help you. While you can consume a lot of things, I still consume a lot of content.
Yeah.
But then I know that my gurus, whether it is Vishal Malkan or Sunil Sir,
Right.
I keep going back and try to align my style of investing with what they say.
Love that. Love that. So Puneet, you've been again someone who really is a big proponent of educating yourself, knowing where your money is really going in, why is it going in. So your thoughts to people who are starting out in this journey. What do you think they should be doing when it comes to learning a little bit without blindly putting their money on the basis of what an influencer or a guru might actually tell you?
So, Gaurav, I'm continuing with what Puneet was saying, and you were asking something. I'll come to your question also. It's about, what my prerogative says is that it's always time for everything. What is happening is that youngsters are looking at going in equities or direct equities or even derivatives without even creating wealth enough to manage their things. So first thing is that you have to create certain portion. You can do certain things. You can take risk, but risk has to be taken on a calculated basis. It has to be taken on the basis that if you lose that, is there some bandwidth to it? So I always suggest youngsters, first create your positioning to that level.
Right.
You can take your risk appetite, increase your risk appetite to that level by educating yourself. So even Puneet we were just sharing that he just didn't jump into it. He burnt his hand. He then educated himself. He then tested himself a lot of time, and then he became that kind of a position where he can now being called as a guru, or people have following it because he has tested himself. But he must have also taken certain cautious steps. He was not losing his business. He was working.
Correct.
He was creating his wealth. Then only he can take risks. So my only objective, my only talk to these youngsters is that first create your goals. Create your risk appetite to that level that you can take that risk. If you can't take that risk and you lose everything, then that's where you're burning your hands. You're actually totally burnt out.
So true. So true. Yeah. And when it comes to the education aspect of it, what paths do you recommend for someone who's just starting out? Now, let's look at young Gen Zs or millennials or people who've now started to create some kind of corpus and are now looking to start on their investing journey. What do you recommend for them?
I always tell them that follow. So I have a very right approach of choosing the right advisor. See, for us, the first thing is hand holding.
Right.
See, I always believe that I was following a dietitian, and what dietitian does. We can YouTube it, we can know about what all is done. What dietitian does is, he actually is monitoring you. He's looking forward to what is right and what is wrong. And he knows what is pluses and minuses about you.
Right.
Moreover, the authoritative level about and your accountability to him. That's most important. That I'm going back, I have to talk to Puneet, I have to get back to him that whether I'm doing this or not. So that what is an advisor's role is.
Right.
Moreover, finding an advisor, the right advisor is most important. And I always take it as a doctor's example. How do you actually choose out the right advisor? You don't go to a doctor just reaching out that, if I want to go for a surgery of a stone, I won't go for a doctor of a heart. I'll actually find out with Gaurav, Gaurav, you had some treatment done.
Correct.
Who was the doctor you recommended? So you will get those doctors and then the name of the doctor, but you won't jump into it. You'll always go to that person, understand what he's looking at. Is he greedy or not? So every profession has greed and every profession has. So we also have a lot of people who must be mis-selling and things. So you have to choose out in a way, test them out, and then you have to hand over. And I think always take a handover from some advisor, look forward to right people, and that's the right way of it. That's what my approach is.
Yeah, and I agree. And I think there's a big misconception in the market that you have to have a certain net worth or a particular portfolio size before you get an advisor. And I think in your case, because I see a lot of the people that you've been helping at Consortium and the Gaurav Bhagat Academy and even other clients, these are people who are just starting out. And I think it's your purpose and your why that you said, okay, I need to handhold them so that they start out right. It's not about the quantum of money they bring, but it's just about the fact that they should make the right decisions early on. And I think that's something that you've been really good at as well.
Absolutely. Gaurav, so I have clients with just starting with 23 years old as just their first career. And I have super HNIs and celebrities.
Right.
But one thing is very common. Everybody has some objective. Objective can be absolutely different. So for a celebrity, it might be only managing of wealth. That's their objective. They don't have anything, but their objective is something which, and their objective is aligned to their risk appetite. So my view is that how I have to align those risk appetite, look into their feelings, their understanding, and that doesn't come in a day's time.
Yeah.
I also need time to understand their risk appetite.
So true.
A lot of times we try to measure out through our charts to risk appetite forms and all those things, but it's the real-time picture only gives you, the real-time testing only gives you the prerogative of that person, whether what risk he holds on.
So true.
So that's what I've been doing. So
yeah, thank you for that. I think you really set in place a big misconception that people have in terms of when they can have access to an advisor, which you said is possible for absolutely, anyone and everyone. And of course, I'll be happy to also put in the coordinates of both our gentlemen, who are here today with us at the GBA, because they're doing some fantastic work, both in the space of equity as well as in the space of, managing even long-term portfolios. And like I said, your entry level can be as small. So I'll definitely share both their details in our links as well. Puneet, coming to you from your perspective, big misconceptions that people have when it comes towards the stock market. What are some of the big misconceptions that you hear and see all the time, and you almost thinking to yourself, "Arey yaar, ye to gaya." So what do you see a lot pertaining to misconceptions amongst people today?
I think some of the broad ones is that यहाँ पैसा नहीं बनता है. Number one. And if I have to invest in the stock market, I would have to actually sit through the whole day staring at the screen. In fact, it is the opposite.
So true.
And then it is a way of, it is speculative, it is gambling, ye satta hai.
So true.
So these are the broad ones. Then obviously, the fear, greed, ego, regret, all that takes over.
Yeah. And a big one that you mentioned is, stock market is gambling. And I hear this, a lot, especially amongst people perhaps, in our age group, where they've already been through a couple of cycles, tried maybe even as early as Harshad Mehta, then again, around the dot-com bust, then again, 2007, 8. Somehow they always get sucked into the wrong times. And then they always kind of, get, burnt or know people who got burned. And this is, dekha, humne to bola tha, this is all gambling. So what's your advice, to people who've been through those cycles and are now perceiving this as gambling? What do you tell them?
Yeah, so either you can go to the casino or you can own one, right? And that's where the tables change hands. One is where you are gambling, you speculate, you don't know what you're doing, and you're just waiting for the dealer to deal you some cards. Or you could be the dealer, where you have an edge. Casino has a 0.5% edge, and that is where they make all the money.
Agreed.
So that's where you go from no risk to a known risk, right? So you don't know risk, and you don't know how to manage risk, and now you go towards the other side of the table, which is, you're dealing out the cards, know what's your edge, and you're using a system to create that money.
Yeah. Agreed. And I love that. You go from no risk to known risk. So true. Puneet, when you have a lot of people, who come to you and they say, okay, now the trending thing is, and of course, you're managing portfolios, and they talk about, crypto, and they talk about, my friends are in, cryptocurrency or NFTs, all the trending aspects of, the last few years. What do you end up telling them? Do you tell them that it's something that one should explore, or is there a certain part of the portfolio that should, delegate? How do you really have these conversations?
So again, it depends on the person. If it's a youngster who is coming in, I always believe that a part of your portfolio can take risk off. You can take risks up to 5 to 10%. It won't harm you at any stage of your life.
Right.
But if you're investing these kinds of things, these are right now, I am also not aware about. The industries are not aware about. So I can't speak about it much on that.
Yeah.
So if you want to take risks, risk to a level of where you can bear that risk.
Correct.
So if it's 1-2% also, it doesn't make a difference. It's a gambling again. I'm just saying that I am not aware about. Markets are not aware about what NFT is, what crypto is going to go. If you want to take risk, 1-2% won't do any harm. But if you are putting across 20% of your portfolio, then your savings will be gone.
Yeah.
So because 80% is your expense at the current age. So it depends on. So I always say that hold it and take a risk if you want to, but to a certain extent.
So again, coming down to the theme of risk management, having your stop losses in play. Puneet, I know your perspective towards crypto is slightly different, NFT is slightly different. Your thought process when it comes to some of these new age investment vehicles, how's it really been for you, and what's your thought process?
So I've never invested in crypto, never will. But then crypto is another chart for us, and crypto also has price action. So if you're investing based on price action and charts,
right.
You can.
Yeah.
But one advice that I want to give anybody who's doing cryptocurrency investing is that it has wild swings. If you want to see price going from 10 to 100, coming back to 90, and then again going back to 200, so be it. Please, do that.
Yeah.
But if you can't digest those wild swings, any stock listed in the stock market or anywhere in the world will give you same kind of returns at the end of the day. It's just that crypto needs a lot of active time from your side.
Of course. And the crypto markets, unlike the equity markets, they never shut. So they're trading 24/7. And hence, if people have overextended themselves, it can be, fairly disturbing. But tell me about something else you mentioned earlier, which I loved. And, of course, while we record this, the markets are open. The markets have just opened after the 15th August, long weekend. There's been a lot of ups and downs, over the course of the day. However, you're completely chill. Okay, you're not you haven't checked your phone even once to see your positions or none of those things. And even though you have several open positions, how do you manage that? How are you coming in on a day when the markets are open, looking relatively relaxed, and whatever's happening in the background is happening in the background? And how are you doing that? I'd love to know that as well.
So as my Guru Vishal Malkan says that, trade from a swimming pool, which actually means that, don't look at the screen, don't touch anything, keep on holding, sit tight. And that's what most of the people don't do. They think that, they find the screen exciting because it's like a video game, prices going up and down, they like movement. I do not do that. Either you can use an algorithm or code your system into a machine, or you can have a human dealer, managing your positions. I have a dealer and I let him manage it. I don't use my brain, neither does he. He just let the system run.
Yeah. And that's interesting because you said that it's now not about even using our brain and our emotion, because we tend to get emotional about some of these decisions that we might make, and that FOMO piece comes into play. And hence, a lot of the guidance is happening because of, would it be the technicals and what the charts are telling you? Is that really driving the action?
Yes, it could be technicals, different types of technical strategies or price action. Or simple, price action and average. It could be anything, but let the system be your boss. If you've designed a system, then it's still using a brain. No point in using that system,
So true. Love that. So, Puneet, tell me this. Now you have a whole generation of, new traders / investors who come up and Puneet spoke about the gamification and how it's almost become apps like the Zero Dhas, etc. have almost made like a video game. And people come and you try to advise them on let's say the equity side of things, and they almost come and say, "Ji mujhe to sab pata hai, mere paas to ye bhi hai, maine to wo bhi dekha hai." How do you handle clients like that who come and be extra knowledgeable when it comes to putting their money in equity?
Absolutely, the Z generation is changing, and these applications and all those things are helping them out. And I always tell them that you do it yourself. It's not investment is not the point. It's about again, do you know where you want to head to? That's most important.
Right.
And all these youngsters, whether I talk about, so I've been even taking sessions for, my son just graduated from Flame University, and I took session of the whole batch. They wanted to understand more onto it. They started their career about starting their jobs.
Of course.
Again, all these youngsters are looking forward to, attracted towards equities. But first thing, and they have those knowledge about it, but they still want to understand the fundamentals of it. So it's up to them. How they can invest. So I always talk about, if I share you my experiences, these youngsters, they always think about, believe in, they don't even know the real goals. Not just youngsters, even reaching out to these 40 years old. I take sessions in corporates. All these people, they don't actually know the real value of their goals. So taking out their, if I talk about passive income, retirement, they never understand what will be the real value, what will they need at that time. So making them understand actually opens up their mind. Okay, this is the kind of money I'll be needing. So how will I achieve it? I'll say, okay, invest anywhere. If you want to invest in equity, have somebody like Puneet or somebody who is expert in that. Take those advice. Just don't jump into it. Take certain steps and create that wealth. But understand where you need to go about. It's not, doesn't matter whom you are doing it, whether it's through us or whether through any application. But you have to have that understanding where you need to reach out.
It's a very interesting thing that you also mentioned, that you're asking them to think about passive income and long-term wealth. Now, a lot of times when I go into organizations and at the GBA, I go in and I work with a lot of leaders, and even people who are just starting out. And I talk to them about, the medium-term goals, the long-term goals. We're talking about even, 1 year, 5 year legacy goals, where we're saying, what are you going to be remembered for? And they almost always come back and say, boss, ये तो pandemic का time है, हमको तो कल का नहीं पता, आप तो 5 साल, 10 साल की बात कर रहे हो. And I see a lot of the youth, having almost the same mindset as well. How are you dealing with those challenges? How are you having that conversation where someone's saying, boss, I don't even know about, 1 year, my uncle passed away or my neighbor passed away, and you're talking about, 5 years, 10 years, 20 years. How are you having that conversation? So,
Gaurav, I always burden people when any person, whether it's a super HNI or a celebrity or any person who's starting his career also, I always talk about their objective first. When you start talking about, let's say, creating a house is the first thing people always think about. When you show them the real value of it, how will you create it? The numbers actually make them go wild. So right now their brain is not working because there's no number behind it. When they see that, okay, I can't achieve my house even in 10 years, they'll start thinking about that. That pulls it away. So there will be people who will not listen. They will burn their hands. We can't pull them out. But 80% people come in because they see the numbers, they realize, and the truth which is coming out from your your intentions are clear, people will understand that. So they understand. They might not come right now. They might join after 1 year or 2 years or 3 years after burning hand, but they come back. What I've seen in my past, I've seen that in the younger stages and younger ages, they burn their hands. They come back. As I shared you in 2020, also a lot of people jumped into those things, but they came back because they realized what mistake they are having.
Interestingly, you also mentioned about real estate as an asset class. Now, if we go back, maybe our parents' generation, for them, it was almost impossible to own real estate. There just wasn't the financing available. And then if we talk about our generation, now it almost became that it's a must do. We're going to take that bit of loan and we're going to put that house payment down for that particular house, flat, whatever it is. What are you seeing from the kids today? Because today you have, and even like Grant Cardone being one of my mentors would always say, oh, don't buy, rent. And, if you do have to buy multifamily, et cetera, et cetera. But what are you hearing from people today? Is it now about renting? Is it about, buying? What are you really hearing?
So a lot of change happened after 2011's crash in real estate. During that, people who were over leveraged into real estate. So people actually didn't have capacity to pay those things and they leveraged out.
So true.
So they burned their hands. Because there were a lot of real estate developers who actually could not even pull back the real estate. So people lost a lot of money. So now what people are realizing that renting out and these youngsters, what they're putting across, again, equities and returns are greed which is coming in, that they start investing into any of the real estate and putting across those money. They are saying that, okay, let's Invest into equity, it will give us much more return.
Correct.
Or invest into any other place, we'll get much more return.
Yeah.
There might be certain places, right? But they are going wrong on the side that they are even not owning the first house also. They stopped owning those things that I don't even need to put across as a residence right now. Over here, what my suggestion is that a lot of times these youngsters are moving around. The reason is this, that they are moving around. They might be in Bangalore, they might be in... So owning a property, then maintaining these property, leasing out these property if you're not there, becomes a hassle. So what I suggest is create your wealth enough which is equivalent to buying a house, whatever you want to buy, whatever stake you want to. Let's say if you want to buy a house or any real estate, then create that wealth enough that you can buy that, own it at that time when you are ready for it. So, but real estate is important. Assets as a class is a very important. Nowadays, it's not just looking forward to residential. There are multiple places you can, industrial or even warehousing. There are a lot of spaces which you can park on. But look at those things, which is the opportunity. And there are a lot of space out of there. You need to think about that.
Got that. So, Puneet, of course, over the weekend, we lost the big bull, Rakesh Jhunjhunwala, who's always a big believer in the India story. And we're talking about, way before anyone else, and he was just always so gung-ho. And I think going back even 15, 20 years, he said, the place where I see the markets is going to be unparalleled. So if I was to ask you, if you're looking at 3 years down the line, so 16th of August, 2025, where do you see, the equity markets actually being tentatively at that time, 3 years from today?
While I would not give you levels, but definitely up. And like Rakesh sir always used to say that I'm perpetually bullish. All you need is, invest and forget, which not many people do. The more you invest, the more you get attached to looking at the screen, tracking the stocks. If government today came in and said that, okay, you can't, there are no tickets available and you can't even take out your money for the next 10 years, everybody would make money in the stock market. So I think always bullish, and that's what we need to... he's left a lot of things to get inspired from.
Oh, for sure. Yes. So, and I completely agree. And I think all asset classes, including equity, real estate, and more, tend to or will definitely give really, really big returns in time to come. Puneet, if I was to ask you today, we'll take two perspectives. We'll take a client who has 2 lakh rupees and a client who has 10 crore rupees. Okay. So how would you guide these to actually invest if they came to you today for advice?
So again, if I talk about first thing which I always do is understand their objective or their needs. Needs is most important.
Agreed.
So if a person with 10 crores coming on, it's not just that 10 crore I just look around.
Right.
What are the other asset classes he's owning? So how much risk is he holding across? So whether he's over leveraged in real estate, and a lot of time we see that 80% of the portfolio is real estate in major channels. So what is the kind of portfolio he's holding? What kind of risk they are holding? Then we come out to understanding is the risk also. What has been past, because if he's holding too much of debt, that means that he has not taken any risk. So accordingly, we have to go onto it. I always start with the beginners that we don't just jump into higher equities immediately, because we need to also understand that person. I told you that it's not just a risk appetite analyzer which gives us the prerogative, it gives us a time which gives us understanding. So I always start with these smaller things, whether it's equity, whether it's mutual fund, whatever suggestions. We always even talk about real estate. Investing into real estate is also an asset class, even gold or whatever asset class, even NFT, if it comes out in the later stages, if he can own a 1% or 2%, why not? So diversification is the key of it. You can't just expect that every day is an equities day or every day is an real estate. We all have seen those things. So advising to a 2 lakh person or to a 10 crore person, the approach is the same. We need to understand their risk appetite, what kind of holding he's having, what is his needs. Accordingly, we park with them.
Got that. So risk appetite, diversification, goals, it doesn't matter in terms of the corpus, but that's how I do it. So Puneet, I'm going to come to you with a more specific question. Now, let's just say if somebody comes in and they're looking at the equity markets, and let's go sector-wise now. So if they had, a corpus available, where would you today, keeping in mind the India story and more, where would you deploy capital, based on a sector-wise allocation today?
I think somebody who's never invested and now coming to the markets newly, I would say that, since Nifty offers a very broad a sector inclusion,
right.
and it constitutes about, the 50 best companies.
Of course.
Largely that risk is taken care of instead of, going theme based and investing ourselves and dividing it into sectors. I think, plain and simple answer would be just keep investing into Nifty ETF.
Right.
Choose one of the Nifty ETFs, index-based ETF, and then keep investing and buy at every dip because it is going to go up.
Yeah, I love that. Look at the Nifty 50, which is the 50 best stocks there is. There will always be churn. There will be people who will be asked to move in and move out.
Yes.
So you can go with a ETF. There's also something else that you mentioned recently in one of our conversations where you said, at the moment, it's almost like everyone's looking at the Dow Jones and they're saying, Dow ko kal kya hua? And then they almost think that, okay, now the Nifty will respond, accordingly. But you said in a few years, you see it flipping, where you actually see, some of the Indian markets actually leading, the charge, and people actually looking at what happened on the Nifty, before they start looking at global markets. What brought that thought around? Love to hear that.
I think it's already flipping, already decoupled from the Dow or the Nasdaq. You'll see that our markets have not fallen while Dow fell and then has recovered. What I am bullish about is that, the way our country is changing with the China effect and how a lot of IT brain has been supplied by India, India becoming self-reliant. I don't think, and the kind of money that FIs have pulled out, and then still the market's not falling, and then they having to return in the last few days.
Correct.
I think we are really Atmanirbhar, and that's what triggered my thought on how we are going to have a path of our own.
I love that. And it's going to be interesting how the FII, DII story plays out, because these guys pulled record money out. I mean, the amount that was coming out every day was like 2,000 crores, 5,000 crores. I mean, it was almost like, our FI is done with the India story. And then all of a sudden it's flipped. And as you rightly mentioned, I think maybe now in the last 2 weeks, they've been buyers. And now, of course, our DIs have been kind of, lightening, some of their support. But it's amazing to see. And do you think that this is also the retail investor who's come in and, is a big believer in the India story, and hence, they're, putting their chips all in, even though the commentary has been negative? Do you think it's even the retail investor that's playing a big role?
Yeah, I think Mr. Jhunjhunwala in one of his interviews said ki jayenge kahan? They will come back.
Correct.
And yes, in the last 2 years, a lot of, I think the Demat accounts have grown to 10x.
Yeah.
And, that is where the retail money is coming in.
Correct.
And at good levels.
Yeah.
And in the last few days, I think a few weeks, there has been an upsurge where there's still a lot of liquidity, and markets have not even crossed their all-time high.
So true.
So I think, yes, good times to come.
Yeah. It's interesting because I remember there was this interview I did with Nikhil Kamath, from Zerodha. And he spoke about the fact, Puneet, and the fact that he says in India, the retail participation in the stock market is so minuscule. In places like the States, it's almost like 83, 84, 85%. I think here it's in single digits in terms of the number of people who are, actively, investing in the markets, right? Yeah. So I think big things that can probably happen, from that perspective as well. Puneet, another thing I want to talk about to you is the need for insurance to protect wealth. Because a lot of people just figure that, health insurance is something I don't need. Life insurance is something that, a little bit of cover is okay. But all of this has changed. I think the pandemic led to a big, blowout in this in terms of mindset change and everything else. What are you saying to people who are still saying that, insurance is something I can do without? What is the conversation you're having with them?
So a lot of conversation on daily basis happen on this subject because people are insured, but again, they are not sufficiently insured. So if I talk about even term insurance, people are aware about. So day before yesterday, I was having a session with Mahindra & Mahindra, and so there was an interaction going on online. And these people, I just interacted and asked them, the first question I asked, what is the cover which you are holding? The maximum people are covered with 1 CR. Now, the reason is that every ad, everything which is speaking about is talking about 1 crore cover.
Right.
They don't realize that if you are having an income of, let's say, 4 lakh rupees per month, will that 1 crore will replace that? They haven't actually calculated. So when you talk about numbers to them, they start realizing, okay, then you have to show the numbers to it, that what is going to be the effect of that 1 crore to your family. Same thing happens with health insurance. What people are not understanding is that health insurance subject where you are there, you are a burden to family, you are not even having any income, your income source is lost, and you have a huge burden. So you lose all your wealth which you have created in that single close. And people have seen that. We have seen massive things over there. And they're all sitting down. These are the people who are sitting down with 5 to 10 lakh of covers, which is sufficiently low today itself. What will be the value 10 years down the line? They're not understanding. So first thing would need, which I put across, is the numbers again. That this is what your cover should be and why it has to be. So why is not clear. So people are aware about that there is a 1 crore policy of health insurance. But why I have to buy it? Nobody is guiding them. That is where the lack of communication is.
So true. And is there a formula that you might have for our listeners in terms of when they're contemplating, and of course, I'm sure many would like to get in touch with you in due course, but when they're contemplating the insurance cover they should take, both in terms of, a health cover as well as life insurance cover, is there a particular formula they should be thinking about?
It is not a formula, but it's a thumb rule which I talk about. And very simple one, I surely want to answer it to audience. You need to know about your expenses. So let's take an example of 50,000. So if I have an expense of my 50,000 per month, if I am not there, my family needs that 50,000. So if I'm doing a cover of 1 crore, I've just taken a term insurance for 1 crore. What will that 1 crore replace? So if my wife invests that 1 crore after me, what is the return? Let's say it's into fixed deposit. She doesn't know anything. She's investing into fixed deposit with the annualized return of 6%. So that 1 crore will replace 6 lakh rupees. 6 lakhs divided by 12. I've not taken any inflation, nothing doing. Every 1 crore is replacing 50,000 per month. So means that if you are having an expense of 1 lakh, you need to have a thumb rule of 2 crore rupees. Means every 50,000 you need to replace for 1 crore. Now this is for a thumb rule. It's not just, there's no inflation, nothing doing, but at least this is the cover. So if you are having a 2 lakh rupees per month expense, take a 4 crore covers. Now coming out to health insurance. The thumb rule, there's no thumb rule. You need to understand that cover is needed not for today, it's needed for future. And life insurance is needed for today, not for future. That's the thumb rule again. Life insurance, your family needs it today. And if I talk about health insurance, you need it 20 years down the line. So sum assured has to be chosen according to 20 years down the line. You need to cover yourself with the highest covers. There are products available. You need to choose out the right covers. We need to have at least 1 crore or 2 crore rupees cover. I'll give you an example over here also. If we think 10 lakh is good enough today, the future value of that 10 lakhs will be in 10 years will be at least 50 lakhs, and that will be at least 1.6 crores in next 20 years. Because inflation, health inflation is going around between 17 to 22%. That's the kind of inflation which is going around. So think about, calculate it. There are products available, and Gaurav, frankly speaking, we just don't explore it because we don't know it. That's the only thing.
Yeah, completely agree. People don't explore it because they don't know it. And truly, I think when it comes to insurance, the best time to start was yesterday. And I guess the next best time to start is today, because truly, the younger you start, the lower your premiums. And I'm thankful to my parents that I think they took out my first policy when I was perhaps 8 or 9. But even when I had to start my business, when I started Consortium, and I had no collateral because obviously things had been really bad for the family and for the company. I remember going to Canara Bank in Sarita Vihar and they asked me what is your collateral that you have? And I said, I have no collateral. I'm busted, man. I'm starting out from scratch. And the resource that I reached out to, and I remember that my parents had taken out a 6 lakh rupee LIC policy 20 years prior, and that's the money that I actually use for collateral. So yeah, insurance can be great collateral as well. So I highly recommend, like you mentioned, that absolutely must be taken out. Okay, Puneet, I'm going to ask you something. I know charity is something that's very dear to your heart, and you've always given back, a substantial amount of what you make. Tell me about your thought process, coming into this, and your advice to everyone when it comes to charity and giving back a part of your profits.
Yeah, so I think what prompted me to do that was something in Sikhism, where they say daswand, and which is 1/10 of you give back 1/10 of what you make. And ever since I started doing that, money comes from where I don't know, but it gives me a lot of conviction in my trades, makes me hold on to them, and now I have a purpose. Sometimes, when you're doing systematic trading, it becomes boring, and suddenly you realize that why am I doing this if it happens automatically? But then I have a purpose that, if I'm attached to a few organizations, then I can actually keep giving back, and then that becomes my purpose of trading and earning money.
Lovely, love that. And the funny part is, and Puneet, sometimes you might be hearing this. So sometimes people come back and they said, "Oh, we will give back, when we have some." Right? And again, when we were supporting the Currency and Cancer Foundation, something that I started, I didn't have the resources and the money, but I still always kept giving back. What is it that you're hearing when it comes to charity? Are people also coming to you and saying, we need to plan for give back, but our give back will happen when we have enough? Or are you hearing people who are saying that, I'll give back irrespective?
So, Gaurav, as I was sharing that, see, it's not just about giving out money, it's about time. Giving out time is also very important. I was just sharing about one of the organization I'm part of, Corporate Connection. So there is a group of spousal chairs where spousal meet over here. And these spouses are all of super HNIs.
Right.
So they just came out and they said that we want to contribute something on the real time. It's not about money. Our husbands, our organizations are already funding it. They are doing CSR activities.
Agreed.
But we want to give time to those things. We can contribute that. Yeah. So they started off with giving their time to these organizations. That's very important. And I think that's where we can start with. If you don't have money, why not give some time to those organizations?
Yeah, and I think my thought on this is, and I want to go back, several years when I myself had started giving out to some charities, and everyone came and told me that, GB, you don't even have, your own means, you're borrowing from the banks, and yet you're giving back. And like Puneet mentioned, I think even then it was always about giving back whatever we could in terms of whatever contribution I could make, and I've never looked back, since. And I see this globally a lot, when you have people contributing to the church in the States, or community or causes. And I think it's something that truly the youth of India could, and not only the youth, but even, everyone in India could do more in terms of just giving back. And not only when there's a crisis. Like I remember when COVID hit and Mission Oxygen happened, I think their target on keto, whatever it was, they did like 120-fold. But why should there only be a crisis when someone needs to give back? Why not just give back at all points and at all times? Just my thoughts. Puneet, you want to add something as well?
Yes, so my Guruji used to say that, "Beta, pehle ahuti daloge to amrit milega." So, sometimes I start my day, let's say if I want to make 50,000 rupees, I would actually donate 5,000 first, before even the market starts. And, it makes me take actions during the day, and usually that day is profitable. But even if it is not, I'm still fulfilled. And about time actually is a non-renewable currency. Probably the most expensive currency. So if you're giving time, you're donating more than what your money is.
100%. Yeah. And like I said, appreciate both of you taking out time and being here and listening and educating our viewers and listeners as well. Really does mean a lot. Couple of concluding questions, because I know we're coming to about an hour now, and that's what duration we normally keep this. Is there any event that scares you, like something that could potentially happen that scares you from the perspective of as I know you always have stop losses in play and all of that as well, so you measure your risk, etc. But is there anything that scares you as a potential event that could be not the best for the markets and investors in particular?
I used to be scared by wars and bomb throws, but then after the Russia-Ukraine war, I'm not scared anymore.
Yeah.
And anyways, like stop loss is my god. So yeah.
Stop loss is your god, truly. And you're right. I mean, the markets, when they fell, when Russia-Ukraine happened, they've bounced back and more, right? And all the commodities and everything else, that had skyrocketed is now coming back to sanity levels as well. Puneet, anything that scares you from the perspective of outcomes for your clients?
So in past 20 years, the experience actually makes you brave, actually. It gives you the confidence. Even the clients which you have, who are 15, 20 years, they are now not scared enough. They actually look out those opportunities.
Yeah.
So things have changed. No doubt there is a scare of something which is always there, which is like if something happens, if I am not there, what will happen? But if I've taken care of those things, the scare is gone. So this is what I always talk about, people to balance out things in the right way, your scare will go away. The scare is always inside. It's about, if you are not there, if things happen, why you are fearful? Because you have not created enough for your family, and that's where the biggest scares come in. Whether it's market, if you have created that wealth, why can't you take risk? I think that's why his fear has also now gone away. And everybody is on those scales that we have reached to a certain point that our scares have been diminished over a period of time because we have created ourselves in a position where the scare is low.
True that. Yeah, love that. So concluding question, and I'll come to you, Puneet, first. What would be your advice to your 20-year-old self, knowing what you know today and the journey that you had? What would your advice to be your 20-year-old self?
I think if I would tell myself, if you want to retire rich, invest early and keep investing, and forget that, stash it away.
Right.
Forget that money.
Yeah. Almost like the Hero Honda ad, like
fill it, shut it, forget.
Yes, I love that.
Good one.
I love that. Puneet, from your perspective, your advice to
So
your
I'll
20-year-old
come to
self.
one answer which I am coming from your earlier one, which is like a 20-year-old, what is the questions which comes out to him? A lot of people ask about that, why not take risk today, and why not wait for those period long term, who's thinking about long term? And talking about equities, a lot of people are in 20-year-old is always looking at higher returns, higher equity, direct investing into directly. So I always talk about that. Okay, you invest directly, whether it's through any app or any systems. First thing you need to know about is that, can you beat the index? Can you beat the benchmark year on year? So 1 year is good enough. Yeah. You have seen good markets. Everybody has pushed on to that level.
Correct.
But can you beat an index or a benchmark, whether it's Nifty or BSC Sensex or whatever that is? Correct. Can you beat that index for continuously 10 years? Yeah. If you can beat that, equity is your game. But if you can't beat, if you can't give that much time, if you can't devote, you don't have understanding about it, let's that market work with some advisor. So advisors like mutual fund people, or invest directly into Nifty index, as he said, rightly said, that invest into index, market will definitely go up. Right. So if you don't have an experience, just park into it. And I know people can't beat index year on year. We have seen quite aggressively that all those fund houses have also not given a consistent return for 20 years. Sometimes X mutual fund is up, sometimes Y is. So that's what we need to look at. Yeah. So that's my advice to 20-year-old.
Love that. Yeah, thank you for all those insights. And the reason why I asked that question is the first time I busted out in the stock markets was probably when I was 17. That's when Harshad Mehta happened. And then again it happened, and that time was just equity. I think the second time it happened when I was 20, 21, and that was when the time of the Badla, etc. was still there, and there was there was F&O, and again a mess like you mentioned as well. And truly, I think if I go back to the 20-year-old me, and I would always say that, it is about risk management. It's about having your stop losses in play, goals, like you mentioned, extensively today, objectives, don't overtrade, even though that's something that people struggle with, every day today as well. And I really appreciate this conversation because, ladies and gentlemen, listeners and viewers, of this podcast and the YouTube video, truly today, we live in tumultuous times. There are ups and downs. Volatility is crazy. There's things that are happening that are sometimes beyond our control. And also there is phenomenal wealth being created. I think more wealth is being created today than ever before. And I think the conversation that we've had today on the Smashed Bashed Yet Not Dashed podcast with both the Puneets has been about finding balance. Yet you can also be aggressive, but you must manage risk. I think that was one of my big takeaways, and just so much more. This is one that you just want to go back and view again and again and again, because the perspectives really have been very holistic, a complete 360-degree, viewpoint really. And thank you both for being here. And of course, I will put in your coordinates, in the links as well, so that people can, like you, follow you, your Insta handles. I know both of you are running, programs and courses now where you're empowering in your both domains. So really appreciate both of you being here. So thank you so very much.
Thank you. Thank you.